Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, it's a pleasure to be back on the show.
John, Taiga Gold announced last week that SSR Mining has completed 95% of the winter drilling phase of its 12,000-meter plan for 2020. Is there a discovery yet?
Jim, we probably won't know for a month or so. It's not clear how much of that 12,000-meter program was accomplished. They did have to cut it short in the end because of the COVID-19 lockdown. But it really doesn't matter at this stage whether they have a discovery. They optioned this project in 2016 from Taiga Gold after they acquired Claude Resources and the CB Santoy facility just to the northwest, and they've already drilled 21,000 meters for 48 holes in the subsequent years, and the most that they have to show for this is one sort of high-grade snippet at the Mac North showing, which is in the middle of this 20 kilometer Santoy shear zone. They only needed to spend $4 million to vest for 60%, and I think they've spent already $7-8 million. And when this year's program, I think it's probably about $4 million. They'll have spent $12 million. Now they can go to 20%, but they need to do that within a year of 80%. They need to do that within a year of vesting for 60% and pay Taiga $3 million. So they haven't declared vesting, even though technically they have vested for 60%. And you kind of wonder, well, gosh, they've drilled 48 holes, and I don't know how many more. There's 12,000 meters, maybe another couple dozen holes. When will they ever hit something? Now, it's possible that they, after all these years of doing sampling and drilling and figuring out the structural geology of this shear zone, that in the next month or two we get a announcement saying we finally have a zone where we can start delineating a high-grade zone. But I don't think it really matters. On March 10th, SSR Mining put on a webinar, and Paul Benson, the CEO, about halfway through, and he's talking about the Santoy facility, in which they spent $90 million over the past few years to upgrade it. They've been busy finding more high-grade ore within the main Santoy project, but then he goes on to talk about the Fisher JV. He doesn't mention Taiga Gold's name, but he talks about how they expect to make discoveries, maybe not in the next quarter or so, but over the next 4 to 5 years. They expect that within that Santoy shear zone and the Fisher JV, they will make discoveries that will keep the Santoy facility going for many, many years. So I thought that's pretty bold. That means these guys are not going away, even if this winter program doesn't deliver anything spectacular. They're pretty confident that this system hosts additional mineralization, such as exists at the Santoy shear portion of this shear zone. And this is interesting for Taiga Gold because in late January, they went out to raise about $500,000 at a 9-cent unit offering. They ended up having such great demand that they closed a $1.4 million financing. So they would like to go to work this summer. In the beginning, the money was just supposed to be for sort of overhead and marketing. One of the key things is this was spun out from Eagle Plains in 2018 to make it easier for SSR to do a takeover bid. They've done this several times before. The best one was Copper Canyon, where they ended up making a fair amount of money for their shareholders. But they have two other projects in that same area of northeastern Saskatchewan, and one of them is the Leland property. It covers another structural zone that streaks off to the west from the Fisher JV, and they've added some additional claims. These guys, they have an in-house dedicated person to, just monitor claims that lapse, and they're there the instant it opens up for map staking. They grab this, and they've been busy expanding that project. They could go in there this summer, and that is their plan, And with all the information that they've gotten from SSR's $8 million expenditure, they've learned an awful lot about what you probably don't want to do in this part of Saskatchewan if you want to deliver a discovery sooner rather than later. So I think it's an excellent situation. The stock has started creeping up. They would like to do some drilling on the Leland in the summer. For now, we wait to see if SSR finally got lucky. Eagle Plains still owns 12 million shares in this company, and well, we keep our fingers crossed that SSR hits something in this round. But even if it doesn't, the SSR's in there for the long haul.
We'll have more with John Kaiser right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, Eagle Plains was a Discovery Watch candidate back in 2017 when it drilled the Iron Range project. What was the outcome?
Well, Eagle Plains is what you call a prospect generator farm-out model follower, but every once in a while they like a target sufficiently that they say, okay, we're not going to farm this out. We're going to spend our own $200,000, $300,000, $400,000 and test to see if this is low-hanging fruit. In the Iron Range, it's in the sort of southeastern part of British Columbia. It's a SEDEX Sullivan 2 type of hunt, and the target that they were excited about, it just didn't deliver what they thought was going to be there based on the geophysics, and so that thing, it's still prospective. It's still a very sizable project. It's southwest of the Monroe project of Highway 50 that we've talked about, where they have not yet managed to get to the target area. It's also project's also next to the Vine project of PPJX, and that's also a Discovery Watch target. The Sullivan 2 hunt is this always recurring dream that there'll be another massive deposit like Sullivan, which was 160 million tons of high-grade zinc-lead mineralization with a couple ounces of silver, plus a whole bunch of other goodies that were collected as a byproduct. But Eagle Plains has generated another one of these plays where it has decided that it's going to drill it on its own. And this one is called the Vulcan, and it's to the north of Iron Range and about 40 kilometers west of Sullivan. And it covers about 15 kilometers of the Sullivan time horizon stratigraphy. It's sort of tilted on the side, dipping towards the west. And since 2002, Eagle Plains has painstakingly stitched together this land package, starting with the northern part, which Caminco, when it merged with Teck, managed to let drop, and slowly adding pieces all the way to the south. And the last big piece they acquired was in 2015. And Tim Termunde actually worked on that project in sort of 2001, or when Ascot Resources, or 1991, when Ascot Resources had it under option from Teck. And in their reinterpretation of what's going on there, they think that all the historical work has been offset from where the actual lower to middle Aldrich transition zone is. And this can, is a fuzzy thing. It's not like a precise break where you can see it, like you look at the Grand Canyon, you can see the transition from one stratigraphy to the next. It's a fuzzier transition, and there has been, red zinc mineralization, other teasers found, which is why Cominco was there in the first place. But a year or two ago, they needed to do some assessment work on this, and so they said, well, in this area here, let's do an IP survey, magnetotelluric survey, and this is in an area where there a lot of other bits and pieces have come together over time, and they ended up with two IP targets and supported by a magnetotelluric target. The first one's maybe 300-400 meters deep, and the other one is considerably deeper, and it's all offset several hundred meters to the west of where all these holes have been drilled in the past. And so they are gearing up in early June to drill a 700-meter hole. They think it's going to cost them a couple $100,000 to drill this hole just to test this target. So it's a long shot type of a hole, but the target has a footprint of 100 million plus tons. If indeed this is everything has been offset, for decades companies have been chasing the Sullivan 2 within this 15-kilometer trend, but they may have all missed it simply because they were not quite interpreting where the stratigraphy begins and ends correctly. So Eagle Plains has dozens of other projects. It stands to do very well if we do get back into an exploration bull cycle with gold leading the charge, and the TSX Venture Exchange has decided they will now allow one-cent financing. So who knows? There could be all kinds of little juniors with gazillions of shares issued at very low prices, which are looking for projects to farm into. But in the case of Eagle Plains, with $3.5 million bucks working capital, another $1.5 million worth of Taiga gold stock that hopefully ends up being worth a lot more. It is part of my 2020 favorites groups, and it's my favorite Western Canada prospect generator. So we're going to shift away from the Iron Range project, which they'll try to farm out to somebody else, and put our Discovery Watch focus on the Vulcan project as another candidate to maybe deliver us the long-awaited Sullivan 2 discovery in southeastern British Columbia.
We'll have more with John Kaiser right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Kaiser. John, Scandium International announced this week that New South Wales has made a ruling on the agricultural land status of the Nyngan Scandium project in Australia. Is this a turnaround for the junior?
It's not quite a turnaround yet. The news release that Scandium International put out says that they have been notified by New South Wales that they have a proposed ruling, which is what in favor of Scandium International, in essence declaring most of this parcel as not agricultural land. There's a few portions of it with trees on it that apparently do qualify as agricultural land. But both parties, Owen Carter, who's the owner of the surface rights, and Scandium International, they have 21 days to make a response to this proposed ruling. And of course, we know that Owen Carter is going to, complain about it in some way or another, and who knows if this has any delaying factor. But then New South Wales itself still has to formalize this, so who knows when exactly this will take place. But it's finally a break in what has been a horrible story for Scandium International. Once this is said and done, the original mining lease will be reinstated, and the entire mine schedule for the definitive feasibility study will be valid again. For background, for those who don't know this story, the Ningen deposit consists of two zones, one on the western parcel, one on the eastern parcel. The entire DFS infrastructure and original 7 years of mining are on the western parcel. So the this parcel was bought a decade ago by Jervois, the predecessor, who owned this from the same farmer at a time when they didn't know that there was mineralization also on the eastern parcel. Scandium ended up acquiring 100% of this. In 2016, they filed for a mining permit. They had some sort of handshake agreement with the farmer that he would eventually sell or lease the eastern property to them. But unbeknownst to them, he sent an objection letter claiming that his land qualified as agricultural land. And the purpose of that is it prevents eminent domain from enabling Scandium International from acquiring that project when it needs it on fair market terms. And this letter, they got the development consent in late 2016. The farmer didn't seem to notice that his objection was not part of it. Only when in May 2017 that the mining lease was granted, did he suddenly wake up and complain to the permitting department, like, what about my agricultural land objection letter? And they said, what letter? And they couldn't find it, so they just blew him off. And that seemed to be the end of that story. But then in sort of mid to, maybe the third quarter of 2018, somebody found the missing letter stuffed in some file related to some other permitting project. And the permitting department realized, the farmer had filed a valid and timely objection, and this means our whole granting of this lease was invalid. So they canceled that lease in early 2019, and they tried to fix it first by having some consultant go in there and do an investigation to see if this truly is agricultural land, and this consultant concluded that it was. And of course, the only person he consulted was the farmer himself, who filled him with all kinds of ideas about why this should qualify as agricultural land. But the 2019 started off horribly when Scandium International announced this problem. And then, of course, the mining lease was revoked. They did grant a new one in July for just the western part, but by then the damage was done. Now, the latest ruling is they ended up getting all kinds of agency consultants to do a kind of collective analysis of that, and it turns out that most of this land does not qualify as agricultural land because the definition is not the same as arable land, which is land that would be good for farming if you properly cultivated and planted it. But for the past decade or so, this farmer has done nothing to this land because he always assumed that it would become part of the mining operation. And he owns lots of land in that general area that he is farming productively. So he, in essence, neglected this land, and that disqualifies it for the agricultural land ruling. And, in the meantime, everybody has realized that this guy is a flake who is trying to shake down Scandium International. He's ended up embarrassing the permitting department. And he even leaked the story in December of 2018 to the Newcastle Herald, to a journalist who's been a gadfly with the permitting department, mainly about coal leases that have been granted farther east where the land actually is pretty and not flat and dreary like in the Ningen area. Anyways, I'm optimistic that will within a month or so be resolved in definitively, and that story, the original plan back in action. But that's not enough for a turnaround. The company ran out of money last year. The face plant that they did to kick off 2019 really sort of ripped the rungs out from underneath this company. In early 2018, they annoyed the market by basically announcing that they weren't going to raise $100 million to build this mine. They were first going to fill the order book through this strategy of letters of intent, which had a 12 to 18 month timeline where they would work with potential off-takers, ship them master alloy, experiment with it, get them to like the product, and hopefully announce a whole bunch of off-take deals that fill the order book, and then make raising $100 million to build this mine a cakewalk. And by the middle of last year, absolutely nothing had been announced in terms of actual off-takes. They had some really good partners such as heat exchanger maker Grangees and the shipbuilder Austell. All of these could have led to very substantial orders, but with this problem with the Carter agricultural land objection hanging over the market, everything lost momentum. The company went dark, stopped putting out news. The stock faded into below 10 cents. The 55% minority shareholders who don't have a seat at the boardroom table had no idea what was going on. So the market is in a funk from which it has not emerged. The company has run out of money, so in essence it's not able to advance the offtake development until it raises money. So the real key is for a turnaround is the company raising a couple $2 million to get the offtake development story back on track. And in February, they put out two important news releases that the market kind of shrugged off. One was they, in effect, declared master alloy supremacy, which means that they have the ability to make master alloy very efficiently, so they do not need to go utilize an intermediary like KBM Phillips or Heinz Schimmelbusch's AMG Advanced Metallurgical, or even something like Traxxas to find the offtake partners. They can make the master alloy. In 2018, they announced an arrangement with Weston. It's an Australian aluminum recycler to build a master alloy portion of or melt shop within their facility. So when the mine's actually in production, they will be making master alloy. In their latest Edgar filings, they published a table of patents that have been granted and pending. Amongst the granted patents, there are ones related to master alloy methods making. So they appear to have the ability now to just cut out the middleman and deal directly with customers. Last July in the webinar, which was sort of the last really serious interaction the company had with the public, they floated the idea of building a pilot plant to make master alloy. And I've since found out that this would probably cost a couple $2 million to build. It would be 2 to 4 tons of master alloy per day type of capacity. And interestingly, at the kind of prices that master alloy sells at, this, if it were to operate all year, would be generating revenues of $10 to $20 million. But the problem with this story is that you need to have scandium oxide. And the only place you get scandium oxide from is China. And the only reason you get it there is because Bloom Energy has not had the sales growth that they had anticipated for their Bloom boxes. They got China to set up these circuits within their titanium dioxide waste streams that were able to strip out the scandium. But Bloom doesn't need all the scandium oxide that they're recovering. There's not enough for anybody to really rely on it and build out the components that rely on aluminum scandium alloy. So the Chinese have been selling this to anybody. But if SCY came there and said, okay, we'll like to buy all this stuff, the Chinese would wake up and say, oh no, we can do that ourselves. So the whole idea was kind of like a fantasy, a great idea. You can make a lot more sense, ship bigger samples to your offtake partners. Then while you have, are busy constructing your mine, you can continue to make this stuff and ship it. But where are you going to get the scandium oxide from? And an interesting thing, when I looked at that patent table, there was a couple patents in there that seemed very odd. And in a Tracy Wozlowski InvestorTel interview in January, the CEO, George Putnam, had said that the company's working on a domestic source of scandium. And I said, well, where are you going to do that? There is nothing in the United States that's a really interesting scandium deposit, such as there is in Finland or in the New South Wales of Australia. And the clue there as to how they could develop a domestic source, it's there. So this is something they have been working on, and that could be a key turnaround if they get a domestic source, not large scale, but small scale scandium oxide in the United States to feed this pilot plant. Then this thing will be off to the races. And the other good news that they put out in February was that the relationship they had with one of the LOI partners, David Weiss's Eck Industries, they have determined that this new aluminum magnesium cerium alloy that Eck Industry has been developing works well with scandium. And this Series 5000 magnesium aluminum alloy that's used for the casting space in aluminum, it uses silicon. Silicon's critical for that casting process, which is a problem for Scandium International because scandium doesn't get along with silicon in this melt. So that whole casting space has not been available to them. But the cerium replaces the role of silicon, and in fact it enhances the corrosion resistance of the cast aluminum alloy part. And with the addition of scandium, you get the strength push that everybody's looking for. So this work that the Eck Industry has been doing, cerium is the most abundant of the light rare earths. It's very cheap. It's not going to be expensive for any long time. But this development could end up revolutionizing the role that aluminum cast parts play. And in a recent Tesla interview that Elon Musk talks about this problem of casting aluminum parts and requiring heat treatment afterwards, a huge headache. Clearly, all the car makers are now looking at this as a potential solution, using cast aluminum parts to lightweight. So there is stuff going on in the background, but until the company raises the money and gets that mining lease fully instated, it's still something to be on what I call a bottom fish watch status.
John, thank you so much for the update.
You're welcome, Jim.
I've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.